Good evening. This is Doc Severson for the Theo Night Report for Tuesday, December 26th. I'm starting out tonight's video looking at the S&P 500, and as usual, what we have is exhaustion across the board as we come into the end of the year. So we're definitely limping into the stables as we finish out the last week of the year. But what's under the hood right now? What's across the board that is part of the S&P 500? For that, what I want to do is I want to take a look at the sector spiders over here. So each of the sector spiders represents it's really broken down into 9 different sectors here. We don't really look at telecommunications. We don't care that much about it. So we'll start out by looking at financials. So financials are also in the same boat here. A lot of this rally has been due to a couple of things. First of all, rising interest rates, number one, giving them better margins. Secondarily, we're looking at potentially markets are forward-looking in terms of the Dodd-Frank bill maybe being released a little bit, maybe some of the restrictions that they've been under for the past, just about 10 years now, perhaps being relaxed just a little bit. So from a charting perspective, not looking at fundamentals, but charting perspective we have. So again, as we look at the financials, we're going to see the monthly chart with an exhaustion level. On the monthly chart, just about every sector is going to have a monthly exhaustion level. We've learned to sort of look past that just because of the extraordinary circumstances that have been created by the central banks. But as far as the timing signal, the weekly chart has also been fairly accurate in terms of showing where we can expect to see consolidation. So as we got into exhaustion down here at the end of 2016, that certainly did pull into some consolidation for quite some time. And now we've reached the next level of that. And we're starting to work that off, as we can see on the daily chart. So the daily chart's pulled into a very nice little horizontal consolidation up there. Now this is what I call the hot water heater effect, is that if the pressure's building up here and if it can't break out to the upside because of the fact that the larger time frames are exhausted, we may see that in fact dump out through the pressure relief valve, which would be a move to the downside that makes everybody happy if that occurs. But otherwise, all the trends are still pointing north right now. It's a difficult bet to point against or to bet against the financials right now. Energy has been quite a surprise lately. So what we've been waiting to see whether or not is this going to be just another lower high sitting up on the monthly chart, or is this going to be a higher low here on the monthly chart. So either of these could set up here. And so what we do is we kind of box in this area right there. If the price breaks above this area, then we know that this is a higher low setting up. If the price breaks down from here, then this sets up a lower high, lower low combination. So anything can happen in this. Approximately, it's about a 16-point range here on the XLE. Now what's different from most other sectors is that the monthly and weekly charts have plenty of energy. This thing can go any way it wants to do, and it should do that fairly rapidly, as we've been waiting forever, it seems. And right now we're starting to see a big move on the daily chart. Now this has also gotten this into exhaustion, and we should probably see some level of consolidation at this point as we get into the end of the year, beginning of the next year. Is not going to just keep on going at this level. We should see a consolidation from here, and then we'll watch for the next break of that consolidation. Consumer discretionary, what can you say about this? Exhaustion across the board, strong trend though. Likely to fall into consolidation at some point here. Again, this is what the probability says, that we should probably flag out up at this level, especially with round number resistance, if it really matters on a sector spider like this, but it's coming in right under 100, so watch out for this one. XLB, extraordinarily strong right now. Materials, monthly exhaustion like most other. However, the weekly chart is showing a fair amount of energy still left to go here because of all this shake and bake consolidation that we've had into the fall. So October, November, early December has been relatively non-linear, which means that there's a little bit of energy left to play with here on the weekly and daily. So this may continue to pull higher. Right now, it's hard to bet against this trend to the upside. XLV Healthcare, once again, we have monthly exhaustion on this breakout from 65 up to close to 85, okay? But we have a lot of energy on the shorter time frame charts because of all this, again, non-linear price behavior chop in this area, which has been occurring really since around the beginning of September. So while other markets have been rallying like crazy, this one's been in consolidation pattern, building up energy, looking for the next move. Again, if this energy does not work out to the upside, then we could see a very quick move back down to retest around this average here, which is the green average right there is the 200-day moving average. So this could be a quick retest of that 200 as we've seen this thing running well above that level and the rubber band is a little bit stretched to the upside. XLU Utilities has had a really difficult month here and actually has printed a lower low. So this is one of the sectors that's actually running counter to markets, and perhaps a lot of this has to do with rising interest rates or the belief in rising interest rates going forward. XLI, so the industrials, kind of the same chart as the Dow, so no surprise there. This thing is, again, monthly, and monthly exhaustion weekly is starting to come out of, with all this shake and bake up here, is starting to come out of exhaustion zone here. And a little bit left on the daily chart. Not much, though, as we get into the end of the year. XLK, again, just like technology or just like the Nasdaq here, not much room to run as we get into the end of the year across the board. And then lastly, we do the consumer staples. And this one is very interesting because the monthly chart has got more energy than just about any other chart that we've looked at here, even more so than the energy sector. So this one's been in consolidation for some time, the better part of this year, frankly. And so all that energy right now, we've seen it rally off the bottom, so we have a weekly exhaustion. So what I would anticipate is that this consolidation, maybe a pullback here or a little bit longer consolidation, would kick into play. But I see money perhaps going back into staples as we get into the new year. Okay, so those are the 9 sectors that I wanted to really look at, and what's interesting are the ones that are likely to stall out from a lack of energy, as well as the ones that are likely to attract capital based on their recent consolidation. Remember, the basic principle here is that range contraction like this, as in we're seeing in the staples, generally creates later range expansion. Which way that expansion goes, obviously, is where we look at the price action. So if we start to print lower highs and lower lows, we know that expansion is actually working to the downside. But right now, it's hard to bet against the trends that are so strong right now, even though they're in exhaustion. Otherwise, guys, it's going to be a quiet, low volume week. We're not anticipating any huge movements, but if there are, pay particular attention to those because those can sometimes telegraph how the new year starts out. That's it for today's report. Thanks for listening, folks. We'll see you tomorrow.